Bitcoin down another nearly 10%, and suddenly MicroStrategy is in trouble. Coming up here on The Jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 6:25 here in the middle part of the country on Tuesday. It is June 14th, 2022. Here's your morning jog around the economic headlines of the world, talking about the price of Bitcoin. Down yet again here today, was down nearly 10%, has recovered a little bit here this morning. Let's talk about MicroStrategy. I haven't talked about the story quite a bit. It's of course been one of the side narratives to Bitcoin, taking out huge multi-million-dollar loans, like $200 million in loans, to go and buy Bitcoin because that's how we're going to carry our balance sheet going forward. Only problem is folks don't want to be paid back in Bitcoin. When you invest in US dollar denominated bonds, folks want to be paid back in dollars, and they want to make sure they can be paid back in dollars. So if Bitcoin prices drop, that means those bonds are subject to collateral requirements and need to post additional Bitcoins and additional dollars to fund them. Looks like we are coming close to that price for MicroStrategy, right? Michael Saylor, sort of Bitcoin guru, as it were. That will continue to have markets nervous. You don't want 90,000+ Bitcoins all dropped on the market on a single day or in a very close proximity because one company is getting a margin call. If you don't think there are hedge funds hunting MicroStrategy, you are nuts. And one of the reasons why I always say in crypto, it is speculative. You don't have companies and earnings backing these tokens. Please do not invest what you can't afford to lose. Next up, talking about dreams that don't reflect reality, we've got the UN chief, Antonio Guterres. I think I have that pretty well pronounced. Gosh, words are tough to come by this morning, saying that new investments in fossil fuel are delusional. I can't think of a more appropriate statement from someone who is certainly in sort of that global elite think tank category as to say we don't need any more investments in fossil fuels on a go-forward basis. You know, it has long been my position here that we need as much energy as we can get from as many different energy sources as we can get. Yes, let's turn down the carbon mix over time, but you have billions of folks in Africa and still millions in China and India that are looking to escape extreme poverty. And guess what? They want some power to run their air conditioners too. On a go-forward basis, this is why we've always necessitated investments in energy and in inflation hedging investments. Think direct exposure to commodities, think pipelines, think real estate companies. Why? Because ultimately the world runs on fossil fuels as it's currently constructed: ammonia, cement, steel, the list goes on, of unreplaceable things that are made out of fossil fuels. And if you don't have exposure to their prices, ultimately you're going to get caught in a situation where you have assets that are not appreciating as fast as prices are, like we have here today. Having some real world and commodity exposure has helped our clients this year tremendously. Last but not least, speaking of additional delusions, we're all delusional here this morning. GM, Ford, hey, Congress, we need additional stimulus. Don't take away the $7,500 electric tax credit. We need more because lithium prices are going up, because cobalt prices are going up, because steel prices, although they have subsided, were going up quite a bit this year. Again, learning the lessons of input costs, controlling them. That is why they need the additional money. Electrification of our society still has a way to go. If you want some additional info throughout the week, feel free to find me on the internet. I am out there. Until then, hope you, your family, have a really good rest of your Tuesday. I am out.